Alright, welcome to today's training. In today's training, I will be teaching us entry and exit strategy, how we can enter a trade and where to exit the trade, where you can enter and where you can come out of a trade. So I'll be showing some write-ups now, whereby we will deliberate on it before we move into the real trading, and how I will actually practicalize it on how you will enter and how you can come out of a trade, because you have to be at the saver side whenever you are trading. You understand? Alright, welcome back to today's training. We are treating entry and exit point, so you just have to follow the write-up. So the first thing, before you execute a trade as a trader, you must know your entry and your exit. You must know where to enter trade and where to come out of the trade for proper risk management and to avoid losing of your account. Hope you understand. Now, before you can execute your trade, you must know where to enter. You must know the points to exit. So, because many people, they do trade at the middle of the trade, because maybe they enter the trade and they see that, okay, this particular candle is selling, so they just follow the selling candle, while not knowing that there may be a retracement or a pullback in that point. So when you enter the trade at that particular time, there will be a pullback, and after maybe you actually hit your TP or your money has finished in your trading account and it started going back down. So these are the things that you have to know in forex trading, because you must know where the market can likely do a pullback. If markets used to come back to a certain price to retest the price before going back, maybe downtrend or uptrend. Hope you understand. So you must know your entry, you must know where to exit the market. And the two major trading strategies that we should consider before I teach you the entry strategies and the exit strategies. Now, these are the two examples of major trading strategies. We have Forex scalping. So we have those people that they actually trade in lower time frame, and they actually enter the market with a little bit high loss size, but they will switch to lower time frame. So as far they catch up with 2 or 3 candles, they close the market. There some may open like 2 or 3 positions. So maybe if one of them, the 3 give them maybe $100, they will close it. And we have swing trading. So those are the people that they leave their trade for weeks, for months, for days. They are the ones that trade with big money. They are the ones that are trading with billions. Hope you understand. They are the ones that they are controlling the market. So you can actually be swing traders with maybe a little bit of money that is not up to billions. So you can even be a swing trader with like $500, but it's very risky, because that money is not really enough for you to stay long in the market. Hope you understand. So example of entry strategies in technical analysis, we have support and resistance. We have our liquidity points. Hope you understand. So the example, like to explain more about support is like something that I'm standing on, something that actually make me stand. Hope you understand. Assuming I'm standing on a plank, so that plank that I'm standing on is my support, and we have resistance. So resistance is like a roof, something that is blocking me to access the next stage. Hope you understand. To access the next stage. So support is what I stand on, and resistance is like a roof. If I'm inside now, I'm actually looking at my roof, and I'm standing on a plank. So that is my support, and my resistance is the roof. And my resistance can become my support, whereby if I break out the resistance and I stand where the resistance is, so the resistance will turn to my support, and my support can turn to resistance if actually I break it and I go down below the support. So the support will turn to my resistance. So I can find my entry at my resistance level or at my support level. So liquidity is area where there's a high probability that there will be a rejection in the market, where can be a pullback, or that the market have been selling in that particular point for days, or the market have ranged in that particular point. And we have breaking of trend line. We have breaking of trend line. We have something that we call CTL, which is counter trend line. So when we get to the practical aspect, I will show you all this. We have chart pattern. We have a lot of chart pattern. So you can do well to get our course. It's just $5. So you can get the course. There's types of chart pattern that we have. We have candlestick patterns, and we have Fibonacci retracement. So this Fibonacci retracement will show us the support and resistance level, whereby the market can actually do pullback, or the market can reverse back. And we have order block and breaker block. So those people that are using smart money concept analysis, they will understand it this one. So we have exit strategies tools. So we have our stop loss. So stop loss means stop my loss. So you are actually instructing the brokers that when you use to this system, they should close your loss. Hope you understand that. We have TP. TP is take my profit, whereby if the market, you are instructing the brokers that if the market gets to this extent, that they should help you to close the trade with the profit that you have made in that particular trade. Hope you understand. So that's all what you need to know about your entry and your exit. So just try to get the course, and you will understand more about chart pattern, about support and resistance, about breaking of trend lines, and more. So you can actually even join our private section. We have a private section where we mentor people and where we send signals. You can join the group. So you can just chat us up that okay, you are interested in the group. You can message the number below this video to do that. Right. Welcome to the practical aspect of the entry and exit strategies. Now, the first thing that we are considering here is support and resistance. Support and resistance. So like this now, this kind of support and resistance is called diagonal resistance, and this is our diagonal support. If you understand. So we have horizontal resistance and horizontal support. So this is a chart pattern generally, and I have my trend line here. To draw a channel here, we see that this market, when it touched this line, it actually come down and test this particular line, and it went up again, touched this line, and it come again, it touched this line, and it went again and touched this line. So we are expecting this chart pattern now is ascending triangle. So I'm expecting a breakout in this channel, and for it to come back and retest, and this market will actually buy. So but I will wait for this market to break out and come back to retest. Don't enter without retesting, because it may actually come back than what you expect. So to have a proper risk management, you have to wait for it to go up and come back for retest before you enter, so that your stop loss can be at a safer place. So we have horizontal resistance and horizontal support. So let me switch to, that is my 30 minutes time frame. So I want to actually switch to higher time frame to see the next resistance here. So as I said, that the resistance is the next place that is possible for this market to actually come back down. So at this point, there's one resistance there, there's one rejection here, there's another rejection here, and there are rejections here. So this place are rejections area, whereby I can put my resistance. So whereby if this market actually break out here, and if this chart pattern give it power to buy, there's probability that this market come back, do a little pullback here before buying. Hope you understand. So this place now, there's a lot of liquidity here, whereby this market it cannot go easily, it cannot break it out easily. So that is our resistance. And if this market actually break out here and pass this resistance have turned to support, and this will be our next resistance, because there's a this will actually be our next resistance. This will be our next resistance if this market actually break out here and move to an uptrend. So there's possibility that this market will come back at this point here, because there is a liquidity and there's a rejection in this area too. So this market have come back here, this market have rejected here, we have another rejection here, and we have a rejection here. So there's probability if this market break out this resistance now, this will turn to resistance, and this will turn to support, and this will turn to our resistance, and there's a possibility that this market actually come back at this rejection area. So that is that about support and resistance. So support is the floor, while the resistance is what is the roof. So this market now, this is the resistance for this particular market if there's a breakout here and it comes here. So we can actually look for, if we want to look for the support here, we will have to come down here and look where so in this area now there's one support here in this area, whereby this market have retested here, there's one support there. So you can still go to our page and look more about our support and resistance, and you can get our course on that on our forex trading. You will know more about support and resistance. So you buying the course, you will automatically have free access to our special groups. So and let's move to the second entry method. So the second entry method is breaking of trend line. Now this is what is called the trend line. Let me go back to 5 minutes time frame. We are not talking on time frame now, we are talking about entry strategy. So I will still do another video on time frame, and if you follow the past videos, you will have understand what time frame is, because I've explained what time frame is. So let me pick my arrow. I want to show you what breaking of trend means. So now this market now is breaking this trend, whereby the structure is changing. Now in this particular place we have low downtrend. Now this is our lower low. We have a lower high here, we have this lower high here, we have a lower low here, we have this a lower high here, we have a lower low here. Hope you understand, because this high is lower than this high, and this high is lower than this high. Hope you understand. So that is the characteristics of downtrend market. We are having this high is lower than this high, so this market has been moving down, but now we have a break of trend line here. So can you see that this market have break out this trend and it's moving up, but don't enter yet until it come back to retest. So after retesting, you can now enter your market and put your stop loss as somewhere here. So you can now fix your TP. So you can fix your TP at you can switch down and look for minor resistance here. So your TP can be somewhere here where my arrow is pointing to. So from this place to this place, your entry now, there's a much of gap than your stop loss. So from here to here will be your stop loss, and your TP will be here. So what you are risking is very low to what you want to, the profit that you want to make. Hope you understand. So that is the meaning of break of trend line. Now we have candlestick pattern. We have a lot of candlestick pattern. We have hammer candlestick pattern. We have inverted hammer. We have shooting star. We have bullish marigold, bearish marigold, and more. So now I will look for a particular candlestick pattern. Now we have hammer candlestick pattern here. This is hammer candlestick pattern. It's a single stick candlestick pattern. So can you see? This is hammer. So an hammer candlestick pattern means that the market will actually buy, and the color of the hammer candlestick pattern can be red and it can be gray. Now depends on where you find it. You determine maybe it's hammer or inverted hammer. If you understand, so you can get a course on that, and you understand what hammer and inverted hammer, shooting star, all this candlestick pattern. So you just look for this anywhere you see candlestick pattern, but you have to wait for confirmation candles, which is 2 green candles. So you can see first one and the second one. So now you can now enter at the third. Your entry will be the third candle, and your stop loss will be below the candle, and you find the next resistance. So can you see that this is our next resistance? I have already drawn that. We have, let me switch to the higher time frame so that you can know that we have a resistance in that place. So this market actually come to this place where there is rejection here, and when it gets there, the market actually starts coming down. So that is our resistance. Hope you understand. So that is about candlestick pattern. So we have a lot of candlestick pattern. You can work on that and wait for your confirmation candles. See that bearish candle or bullish candle. So you should work on that one personally. So after we have Fibonacci retracement. So the work of this Fibonacci retracement is to tell us where we have high probability that the market can do a pullback. So let me take my Fibonacci retracement. So now we have, if you want to use that Fibonacci, you will know where your last high is and where your last low is. Okay, so now let me just put this on the last high. This is our last high and this is our last low. So there is, at this 61.8 there is always rejection, and at 50.02 of these things they have strong rejection. Hope you understand. So I can use Fibonacci retracement to know my next resistance or my next support. Hope you understand. Now if I want to use it to know support, I will turn this 0 up and I will bring this 100 down. So the 68.1, where we find the 68.1 will be my support, and the 0.0 will be my the overall high. Or you cannot put your TP at overall high. You should look for there are some places that there will be a rejections, like 23.6. now there's a rejection in that area, so you put your resistance in that place, or you use 38.2. Hope you understand. All these things, they are rejections area where the rejections have occurred in the past. But 50.0 and 61.8, they have the stronger rejection area. So, and the last one is order block. So we have order block and breaker block.